The topic is audit process, and I have said there are four subsections under which audit process will be discussed. The first one is audit strategy, which will include risk-based auditing, systems audit, balance sheet approach, revenue, expedition and other cycles, directional testing, and analytical procedures. The second aspect of audit process will be planning. You can call it audit planning. Audit planning. And that will include assessment of materiality. Assessment of materiality. And the second one under that one is risk assessment. Risk assessment. The third one under audit process is audit evidence. Audit evidence. And that will include documentation, related parties, management
Related.
representations, and using the work of others. Using the work of others. And the fourth subsection or part of it is evaluation and review. Evaluation and review. And that will include opening balances and comparatives.
Sir, come again.
Opening balances and comparatives. I will tell you what they are skeletally when I finish the dictation. Opening balances and comparatives. Other information. Subsequent events. And then going concern. These are the broad subdivisions under which we'll be discussing audit process. To let you have an idea of what goes into each of them, let me just take you through what they are. When you talk about audit strategy, it is the overall approach. It is the overall approach to the audit. It is the documentation of the overall approach to the audit. You know, when you say strategy, somebody can ask you as a student, what is your learning strategy? What is your approach to doing a thing? That is the strategy. So the strategies which are open to the auditor in the course of his work can be classified under any of these. What is his approach to the auditing? Is he going to use risk-based auditing? When you talk of risk-based auditing, the auditor is looking at areas which are prone to high level of risk. Maybe he's selecting particular transactions which have proved to be dominant in the past, areas of greater attention than others, areas where the risk is considered to be higher than others. So he may be concentrating on those areas to the detriment of other areas which are considered less risky. That could be his approach, risk-based auditing. The auditor may be looking at systems audit. If it's a computerized, if it's an EDP accounting system, it may be looking at a way of using computer-assisted techniques, computer audit techniques to audit the system. You'll be looking at systems audit. Systems has to do with procedures of doing things, internal control system, accounting system, general ledger system, all of those systems, such that if it tells the system and the system is working fine, it will assume that all transactions passing through the system will be okay. I don't know if that makes sense to you. For instance, if I test a class, if I ask a question in the general class and people the answers are coming out correctly, I can assume that all members of the class have knowledge of that question or that subject matter. So that is the systems approach. But when you say transaction-based approach, it means I want to look at individual students in that class. I'm not looking at the class as a system, as a whole again. I'm looking at individuals there. I want to do more probing. I want to do more examination. I want to do more satisfaction that individuals, that many people understand what I'm talking about. I'm not relying on the entire class chorusing in the answer as a way of judgment. So the systems audit approach will look at the chorusing, the totality of the system. If the system is working fine, But if I test through the system, through one or two students, and the thing is working fine, I can say, okay, the system is good. So we cannot play reliance on the outputs from such a system. The opposite of it is transaction-based audit, whereby the auditor does more substantive testing rather than compliance testing. Systems audit lead to what we call compliance testing, but other kind of approaches will be transaction-based, which is substantive testing. You are substantiating, you are testing in details, but in other systems you are testing skeletally. Are you following the explanation?
Yes, sir.
What we call revenue, expenditure, and other cycles. These are period costs and period incomes which occur from year to year. It may be the auditor's interest to focus on those ones as well. Look at the way the money comes in, the way it goes out on a regular basis, and looking at the cutoff procedure. You know, analytical procedure has to do with evaluating ratios with a view to looking at their consistency, the fit of such ratios. For example, if a company has low stock turnover, its working capital ought to be high. If the company has high stock turnover, the working capital of that company ought to be low, because turnover is a measure of the frequency of stock replenishment. Do you understand that? If you have small money to trade, you be as soon as you sell the few items that you have in your ware, you rush back to go and buy another. When you sell again, you rush back. The number of times you are rushing back is the rate of stock turnover, is the rate of turnover, number of times of stock replenishment. But if you have large capital, you can buy bulk and stay a little while before you go again to replenish. So it is expected that if your stock turnover is high, your working capital ought to be low. If your working capital is high, then your turnover ought to be low. But when your capital is low, then your working capital ought to be high, your turnover rate ought to be high. But if the reverse is the case, through analytical review, the auditor will know. So it is a measure of consistency in the component parts of the financial statement. That is the issue of strategy. When you talk of planning, planning will address the way the audit is performed such that it can be effective. Audit plan would document specific procedures for each class of transactions, balances, or disclosures. So the detailed procedures which you want to follow are contained in your planning, and that will include you assessing the risk inherent in the audit and the materiality of errors which may be contained in the course of your audit. We'll be looking at those ones later too. Then talking about audit evidence. If you have questions, please stop me and ask your questions. So, are you there? Pẹ̀lẹ́,
Yes, sir.
bí àwọn ọmọ tí lọ́wọ́ ń tiẹ̀. So the issue of audit evidence.
No, sir.
When you talk about evidence, uh, if I say you should show me the evidence of passing a particular course, you either give me a printout of your transcript as copied on the platform, or you point to the score sheet which the lecturer has in the department. So evidence will be the proof, the documentation about something that has happened. Evidence is about documentation, yeah, essentially. You must document what you have done. What processes have you done in the course of the audit? What documents did you come about and you obtain in the course of the audit? What supporting documents are you keeping in your file to prove that certain jobs were done in the course of the audit? That's about documentation. And talking about documentation, you talk of audit files, which is broken into permanent files and current files. You must have been taught that earlier, I'm sure, haven't you? The permanent files will contain matters of continued relevance to the audit and the client, while the current files will contain matters relating to the current audit for that year's audit. Current file for the permanent file, it will be audit of continued relevance. So as an assignment in that, you want to tell me you are going to do a small write-up on the permanent and audit files and the contents. What would you expect to find in the permanent audit file? What would you expect to find in the current audit file of an audit firm? You submit that before the next class. The management representations. When an auditor is gathering evidence, and there are those where there are no clear-cut evidence to be obtained by him, he can rely on management representation. It is a letter written by management to the auditor, affirming the correctness of certain items in the course of the audit, where the auditor is not sufficiently clear on such matters. And of course, you can use the work of others, where the auditor is not skilled enough. Where the auditor is not skilled enough in certain aspects of his job, you can rely on expert assessment. If, for instance, I'm auditing a company where there are jewelries and I don't know how to place values on it, I can ask a professional valuers of such items to give us their valuation so that we can compare with the book record of the client and see whether there's an understatement or overstatement. All of these things, or in oil and gas accounting procedures, the auditor not being an engineer may not understand how measurements of stores are undertaken. He may call an expert to help evaluate it and advise him on the figures or values which are shown in the books. This has to do with using the work of others. And the last one, which is evaluation and review. I talked about opening balances and comparatives. Maybe it was Moyo who was asking question on that opening balances. It doesn't make sense to her. Was it Moyo that was raising the issue? Kotilo. Moyo, sorry, Oluwa. Ah, are you
Which
there?
one, sir?
Are you the one talking about opening balances and comparatives the other time?
It's, I'm not the one.
Okay, let us
It's the
assume that you are the one.
second way.
Let's assume that you are the one. Anyway, when you prepare your statement of financial position and your statement of income, you normally show for the current year only. But under published accounts, there should be comparative figures for the preceding year as well. Have you ever seen that format before? Especially when you are doing ratio analysis.
No.
They will give you a balance sheet for a particular year and they will be showing the figures for the other. Okay, when you do your statement of is it cash flow or your statement of cash flow, you'll be given two figures, corresponding figures, one for the preceding year, one for the current year. So those ones are the ones we call comparatives. You are showing comparative balances or comparative account balances of those items. Those are comparatives. And that comparative which compares with the current year is what we call the opening balances. You know, so the auditor must ensure that the opening balances are going to the ledger through the general journal is correct to the previous balance sheet, and that in the course of presentation, the comparatives are also shown on the face of the financial statements. Well, if you look at any of these published accounts of companies, as you can download on the internet, you will always see figures in current year, preceding year. That's the way things are shown under published accounts. When we see other information, those ones are the ones we find in the disclosures. Other information not contained on the face of the account, but which are shown as notes to the accounts. Then subsequent events. These are post-balance sheet events. Post-balance sheet events. After the balance sheet and the accounts are drawn, there may be other happenings within the company which may affect the figures which are contained in the balance sheet of the company. And of course, going concern, it is important that the auditor would give an opinion or assess the going concern status of the company. When is this company going to die? With the trend of events, is it really healthy? The auditor must be able to advise the client and do some analysis to confirm the going concern status of such an entity. That's the brief lowdown of the general subdivision of this audit process. Does any of us have questions on that? Does any of us have questions on that? Ẹ lè sọ̀rọ̀ mọ́ àbí? Eh? Victor, questions or you are sleeping? Kelani, no comment.
Yes, I know.
Abisola, gbogbo ẹ̀ ló yé wa. Isansa gift, is everything okay? Doyin Salami, all correct?
Sir.
Anna, any question?
Yes, sir.
Okay. So you be as undertaken to send me a message that all of you are with me. Is that correct?
Yes, sir.
Okay.
Yes, sir.
So let us now look at one part of it, which is audit planning. We want to look at audit planning and documentation now, and that's what we'll be doing today. In the next 15 minutes, we'll be looking at that, then we can end the class. It's not supposed to be too lengthy class, so that we can gain something. Audit planning. I may likely ask you, what is the need for planning? Audit has to be planned so that the audit can be done in an effective manner. Audit planning is necessary for an effective audit to be performed. Audit planning is regulated by International Standard of Auditing (ISA) number 300. ISA number 300 with the title Planning and Audit of Financial Statements. That standard sets out the basic reasoning for audit planning, that the auditor should plan the audit work, so that the audit will be performed in an effective manner. What does planning entail? Planning entails developing a general strategy and a detailed approach for the expected nature, timing, and extent of the audit, which means the auditor plans to perform the audit in an efficient and timely manner. You know, the form and nature of planning may be affected by the size of the company being audited, the size of the entity, the complexity of the audit, whether it is a specialized audit or not, the auditor's experience with the entity, the knowledge of the auditor of the business, the commercial environment in which the business operates, and the method of processing transactions, whether manual, mechanical, or computerized, and then the reporting requirements of such an entity, whether it is just a general requirement or there are other additional statutory requirements which are imposed because of the nature of the industry to which such a client belongs. So all of these are what we call the form and nature of planning, affected by all of this. Then what are the objectives of planning? It is to ensure that appropriate attention is devoted to important areas of the audit, and to ensure that potential problems are identified. Also to ensure that the work is completed expeditiously, that is without time wasting. A proper assignment of work to assistants is done. You allocate work to your subordinates well, and that the coordination of work done by other auditors and experts are well attended to. And then it allows you to review work done. When you plan, you can also facilitate review. I will be sending you the audio of this discussion so that you can listen to it over and over again for recapitulation. Will that be okay for you?
Yes,
Yes, sir.
sir.
Thank you, sir. Because
Or
you
you
are
don't
fast.
want?
We
We
want,
want
sir.
to.
Thank you, sir.
We want, sir. Thank you,
Because
sir.
I may
God bless
appear
you,
too
sir.
slow for you to judge. So have I been too slow?
Yes. No, sir, you're too
I
fast.
Hmm. Kìlání ló sọ̀rọ̀ yẹn.
have been too fast.
Want, sir.
Not you. Anyway, àṣírí-bò kò lè jẹ́ kí n mọ ta ló sọ̀rọ̀ nínú yín. It's alright. If Kìlání tọ̀ á ní mo yọ̀ ni. Tí mo yọ̀ bá sọ̀rọ̀ á ní Hánà ni. Hánà bá sọ̀rọ̀ á ní Sàlámì ni. No problem. No problem. You know. Okay, so talking about the audit strategy as part of planning, the audit strategy will include the scope of the audit, the financial reporting framework, the locations of the audit, the reporting objectives of the audit, which includes the reporting dates and the communication with those charged with governance. Who are those charged with governance? We're talking about the audit committee in this case, the audit committee of the board of directors, and those are part of and the regulatory authorities as well. All of those are the ones charged with governance. Then assessing materiality levels, preliminary identification of higher risk areas and material balances. Then whether the auditor should plan to obtain evidence of effectiveness of internal control or not. The resources to be applied or to be deployed to the audit and the management. I have mentioned to you about nine items now under strategy. I mentioned the scope, the financial reporting framework. I mentioned the locations of the client. I mentioned the reporting objectives. I mentioned the materiality levels. And I mentioned preliminary identification of risk and material balances. And I mentioned whether the auditor should obtain evidence of effectiveness of internal control. I also mentioned the resources to be applied by the auditor, in the course of the audit, in terms of experienced members, budget of hours, and the timings of such engagement. And lastly, I mentioned management of the audit, that's of the direction of supervision, the timings of brief briefing meetings, and review procedures. All of these ones are what you have under audit strategy. These are matters which are contained in determining a strategy. You know, so if I'm asking for matters which get to be considered on strategy, can you mute your audio so that you can only listen to me until you want to talk, so that the external background noise from you will not enter into our discussion? That's a male voice harassing us here. Is that coming from Osonyibi's end? Yes, sir. Can you hear that? Who is the person? Hello, are you with us? Are you still hearing me?
Yes, sir, we're hearing
Whose system was giving us problem the other time? Somebody's microphone is not muted. If you mute your microphone, you only unmute it when you want to talk. That's better. Otherwise, your background noise here will be affecting us. You understand? Now, that is an overview of the audit strategy. Talking about the audit strategy will now lead you. It will not guide you to develop the audit plan. The audit strategy will guide you to develop the audit plan. And that audit plan now will encompass 4 main items. First of it, 3 main items. The first of it is the nature, timing, and the extent of audit procedures. That is the first. The nature. Akinabi says she cannot hear anything. No, let's check for her. Akinabi, is it improving now? We lost Akinabi. She can't hear anything. One person is not on the platform again. Maybe fluctuating network. What could have happened? Akinabi, are you back? When Nabi Muhyiddin has joined. Muhyiddin.
Yes, sir. Good afternoon, sir.
Egu. Good to see you. Where have you been?
Yes, sir. It is the network that has been fluctuating there, sir.
It's been network since the beginning of the class. As I've not been seeing you, you say it's network. This will look like
I've
your
been
first
coming to class.
appearance.
I was in the last class, sir.
So what's the last 4 digits of your matric number?
9078.
1978. 1978, Muhyiddin. Okay. Any other person who has sneaked in without our knowledge, because we've taken attendance already. Akinabi, are you hearing us now? Yes, Esther, not go. Esther. Ẹ bá mi pè é bí a gbọ́. Anyway, Esther will get the audio recording later then. I am not sure because she posted that she couldn't hear us. That's why I'm emphatic about her. Can we continue, please? I was talking about the audit plan, which I said that the audit strategy guides the development of the audit plan, and that it is more detailed than the audit strategy. And what does it contain? 1, the nature, timing, and the extent of audit procedures. That is in the audit plan. And then 2, for each material class of transactions, the account balance or disclosure. And finally, planning those procedures take place over the course of the audit. So those are the things that has to do with the audit plan. There's one thing I want you to know also, that is interim and final audit. Can somebody distinguish between interim and final audit for us? Interim and final audit. Interim and final audit. Yes? When is interim performed? When is final audit performed? Tomiwa, interim and final audit. Hannah, how far? When is interim done? When is final done? IDK, Abi?
Sir, I don't
IDK?
know.
I don't know.
I don't know if I'm IDK.
When is interim audit performed? When is final audit performed?
Okay, interim audit is performed before the financial year ends,
Okay. And
and
final?
final audit after the the total package. After the financial year has come to an end. That's my
That's very correct. During the financial year, you carry out interim audit, and the final audit will come up after the financial year end. That's very correct. So during the interim audit, the procedures which are likely to be conducted at that time will include analytical procedures, test of controls, updating risk assessment, review. You need investigation for Qatar. Tani, you know, that must be gift.
That is not me, because it's not me. I didn't see. My mic.
If I didn't accuse you, you won't talk since morning. I've been waiting for you to talk. That must be
I was one
Abisola.
that answered the
That must be
question.
Abisola there. That must be Abisola. That must be Abisola. Abisola. So interim audit procedures will include analytical procedures, test of controls, updating risk assessment, review of relevant internal audit reports, and substantive testing. Testing happens during the interim audit. But during the final audit, at this stage, a set of draft financial statements or at least a trial balance will be available. And the procedures will include completion of test of controls and substantive tests, which was started at the interim audit. Then analytical procedures on financial statements and the substantive testing of financial statements. There are some tests which are done concurrently during interim and final. You see, the interim is just that you want to minimize the work to be done at the final audit by starting early so that you can have better audit evidence. That's why you do interim audit. Very quickly, let us look at audit documentation before we sign out. Audit documentation. Audit documentation. This is guided by International Standards of Auditing, ISA number 230, titled Documentation. It states that the auditor should document matters which are important in providing audit evidence to support the auditor's opinion and evidence that the audit was carried out in accordance with the international standards of auditing. You know, so working papers, part of which I have given you as an assignment, will assist in the planning and performance of the audit. It will assist in the supervision and review of the audit work. It will enable the audit team to be accountable for its work. It will retain a record of matters of continuing significance to future audits. It will enable quality control reviews to be performed. Those are the advantages of having audit working papers. And audit working papers are the things you keep in your audit, that you keep as audit evidence. Audit working papers, when kept, are the one we call audit evidence. You know, so the contents should be sufficient, should be complete, and must be detailed so that the auditor can rely on them. The reasoning of all significant or not significant matters requiring exercise of judgment with the auditor's conclusion must be documented in these working papers. These are the kind of things that you find in the audit working papers. Like I told you, the permanent file and the current file are the two main classes. I want you to tell me what items are contained in each of those files. At least up to about 5 in the permanent file and up to more than 10 in the current file may be listed. Just try your best and lay hands on whatever listing. Then we can take our correction subsequently. The custody and retention of audit working papers will remain with the client, with the auditor. The auditor is entitled to the custody and retention of his audit working papers, even though those information relate to the client, but by law, he has the power to keep them. And it must not be kept lesser than 5 years. You cannot destroy your audit working papers until after 6 years because matters may arise on it at any time. Don't say you cannot find the evidence of your work. No. But after 6 years, you may now be legally excused from producing working papers. Under the relevant tax laws in Nigeria, any account not examined by the Federal Revenue Service within 6 years may not be examined again. The client may not answer questions on such accounts again. There's a statutory limit of 6 years within which to examine such accounts. The same thing applies to the auditor. Generally, it is assumed that the auditor has lien on his working papers. That is, he has an entitlement to have ownership and control of those working papers, and it must be retained for at least 6 years. Is that okay? So, by way of summary, the audit is performed, the planning is necessary so that the audit can be done in an effective manner. And the approach to the audit is documented in the audit strategy. The audit plan documents specific procedures for each class of transactions. And the audit is usually carried out in two phases, interim and final audit. All evidence gathered in the course of the audit is documented as audit working papers. That's where we are today. Any question, please? Question or questions? Why are you not talking? Can you hear me?
Yes, sir.
Yes, sir.
I take your quietness or silence to be that everything has sunk into your head and it's really understood. Not be so?
Sir, you said any other document is known as. Sorry, I didn't get that part.
Bí láti sọ yẹn báyìí o. But I saw sọ̀rọ̀ any
Sir,
other document in connection with what?
no, the last thing you said before
The
you
audit
asked
work.
said any other document. When the audit work is regarded as what? Didn't get it.
And what is your question on it?
Sir, I didn't get the last thing you said. You said audit working paper, like any other document. I didn't finish I'm trying to jot some things down.
Well, I will send the audio to you, you link it up there.
Okay, sir.
Because what I said is that audit working papers consist of evidences which are gathered by the auditor in the course of the audit work. And I told you they are classified into two files, permanent and current. And I said you should list for me the items which are contained in each of them so that I can see. And I say minimum of 5 and about 10 for the current, which means more will go into the current than the permanent. Anyhow, but you need to know that the permanent has to do with items of continued relevance to the company and the audit. And then the current relates to the specific audit year that you are carrying out at that time. So that will distinguish any document that you are listing there. Look at the tenor, look at the relevance, look at what it is supposed to achieve before you put it there. I'm trying to see, I want to guide you ahead to our next topic. In our next class, we'll be looking at assessment of risk and materiality. We'll be looking at risk assessment and materiality. The same thing goes for in addition to audit sampling, you know, so that that's what we'll be doing next. If we are able to do that fast enough, then we can consider we still need to do EDP, audit of computerized accounting system. I want to introduce you to group audit as well, skeletally, theoretical framework. And I also want to mention to you things which are done under investigations generally. In addition to, okay, we can take specialized audit with what I have stated earlier. If we look at risk assessment, materiality, then we can now look at audit of specialized audit of solicitors accounts alongside. So that in another lecture we can now look at whether group and investigations together before we now go to EDP to close for the semester. Anyway, when are we taking our mid-semester test? Can we do it in the next class and make it physical?
Okay.
Let's agree on the platform later. Let me have your comments on the platform.
Okay, sir.
So if there are no questions, this will be all from my end.
Thank you, sir.
Okay,
Thank you
ladies
for your
and
time, sir.
gentlemen, thanks for coming. See you again.
Thank you very much.
Yeah.
Bye. Bye.